let's pick this up with some panelists like Inga-Lill Carlberg, who has a lot of experience from the financial industry, amongst other things, 14 years of capital management at Nordea. And now you're into Trill Impact, private equity. Yeah, with an impact.
With impact, yes. I currently work for a newly started private equity company called Trill Impact, because the strategy is to invest in companies that make a positive impact, either environmentally or socially. And we truly believe, we haven't started to invest yet, so because the company was starting during the spring, but we have been working on our strategy quite heavily, and we truly believe that financial return and impact goes hand in hand. So profit and purpose is really a good combination.
Great, so that's where you come from. And Grevelius, also well experienced within the Swedish financial industry, being fund manager for several big funds at the Handelsbanken and being in the top leadership there. But now you're doing other things. Amongst other things, you started a robo-advisor. Yeah, Opti. And I'm sure we can connect you to on that subject when it comes to being gender neutral in advising. And also Anna Storåkers, welcome to the panel. Up until last year, country head of Nordea in Sweden, now board professional, for instance, at the board of the huge ABN AMRO group in Holland, based in Holland. And also, you have dipped your toes into the Swedish fintech river a bit lately.
A little bit, yeah.
First of all, dear panelists, any spontaneous reflections upon what you've heard from Professor Baeckstrom?
Fantastic research. Thank you so much. And I have a lot of experience from, asset management, private banking, and I just recognize every single thing you say.
Okay.
Absolutely.
Yeah, I really thought about a lot what you say about self-perception, that it influences behavior, and how easy it is to influence the self-perception of a woman. I think, and I can see the applicability not only in the investment advice area, but also if you think about, like we talked about before, how you recruit, what words you use in ads, how that influences self-perception, or only being among, when I started in Nordea running the SME business or corporate business, it's clear to me that almost every single customer or client was a man in this mid-level of Swedish companies. I mean, the owners are often men, and the customers and the CFOs, and very, very seldom women. So, and how that actually impacts also then the bankers that are then also mostly men. I think it's just interesting to see how it influenced the whole structure of a company.
But I bet you wouldn't influence a woman's self-perception when it comes to parenting as easily, because she's more comfortable in her abilities to parent.
Sure.
Yeah.
What are your experience of this phenomena that a woman advisor would prefer to talk to a woman client would prefer to talk to a woman advisor, female advisor?
My experience, I reflected a lot also because I spent 9 years heading a private banking organization, and I also reflected on my first thought was that women are the stereotypical description that you have, and also I concluded that the higher up, because I've been working with mass affluent, and high net worth individuals, so it's less so higher up in the segment. But during that time when I was working with private banking and clients, we saw the potential to really fit the advisor with the investor in many aspects, a gender perspective, but also the interest if you're trading oriented or more strategic. So this is important. But then I also reflected on, and I think that was one of your solutions, that we very much depend on the risk profiling models and need analysis. And there seems to be a scope for improvement there to really gather a wider perspective. So short term, I guess the solution is to really be better fitting the advisor with the investment or the client. But long term, it shouldn't be different if you have a male advisor or a female advisor. You should be better at constructing those risk profiling models and need analysis than we are today.
I agree with that.
I have exactly the same kind of experience. I was heading a private banking unit, working with very high net worth individuals. When I came there, it was like the advisors, the private bankers were like, it was 20 persons, 19 were men. But then I started asking new clients coming in if they preferred a male or a female advisor. And I would say that most women and also most men actually preferred a female advisor. Because kind of, I mean, probably based in characteristics more than, I mean, anything else. So when I left, it was like 60% of the bankers were actually female, because I really felt we had to change that.
I think I wanted to say something that, because what is being pointed out here is that actually in private banking, private wealth management, nurturing is a very important skill.
Absolutely.
So people feel the trust is a really, really important element, and therefore actually the female bankers, and this is what all the bankers I speak to say the same thing, is that my female colleagues are better at their jobs because they have more caring and clients trust them more.
Yeah.
And still we have more men.
Challenge the clients in the same way. They, I mean, are in general better in listening.
Yeah.
Anna, do you have any experience of this, that female clients would be more comfortable with female client managers, account managers?
Well, I find in my role at Nordea, I felt that I was often put into meetings to represent, I mean, when you had a female client, no matter if it was in a bigger corporation or if it's female private banking customers, often I was invited to those type of meetings to represent Nordea, so to speak, even though I was not part of the client team per se. So I think there's definitely at least a perception that there's a need to put forward the women more when you have women, because and definitely some women demand that.
Ylva, this nurturing thing, could you be more specific in what respect would I, as I come with loads of money to you and want financial advice, why would I want to feel nurtured in that situation?
It's because you want to trust me. I think it's based on trust, and it's because you know that I'm going to look after you when the markets fall. I'm going to call you and I'm going to care about you still when times are rough. I found that's the most successful client acquisition strategy I've ever had, is actually looking after your clients when the markets fall, making that really hard phone call after you'd had a crash, and caring. I think that's what people feel. It's this easy to trust a woman, I think.
It's a relational thing.
Yeah, it's a relational thing, yeah. Which is why, you know, when I became a relationship psychotherapist, when I was still an advisor, people thought I was insane. I think, what's that got to do with banking? And I said to them, it's got everything to do with banking, because the better you are at understanding the personal relationship, the more you're going to sell effectively to your clients.
Ann, drawing upon your recent experience about advising and this robo-advisor that you're working with, in what way can that take away the gender bias or enhance it?
No, it definitely takes away the gender bias, because you do everything digitally. So you do the suitability, you answer all the questions that we kind of, as an advisor, have to ask you, and also for being able to put together a portfolio for you. But we do all this. I mean, there's not someone sitting at the other end of the table asking you things, making you feel, oh, maybe I answered this wrong or something, anything like that. So you do everything digitally when it suits you in the evening, or, I mean, you can take your time, answer all the questions about your economy and financial situation and risk tolerance. You do this in your own way. So you are not affected by anyone asking the questions. And we see, and I also, I mean, compared to doing this the normal way, the old-fashioned way, we could see at the bank where I worked, we could see very clearly that the client portfolios were very much reflected by the advisor. So advisor A maybe had a very high risk tolerance, and he really loved equities. Then his client base had higher risk than this other advisor. that was more risk-averse. So, I mean, you could also see, I mean, I think, and I'm quite sure that when you do it, when you answer the questions, without being affected by a person, I think you do it more honest to yourself.
But I remember when I was still in my old place where I worked, and there was a robo-advising function launched, that it was mostly men between 35 and 40 that were the client group that actually actively sought to use that service. Maybe that has changed, but there's also maybe a bias in the way, in that there are maybe fewer women going for the fully self-directed way.
Well, we see, of course, there are more men, but I mean, we are quite happy. We have over like 30% women, female clients, which I think is very good because we haven't really directed any kind of marketing or anything like that.
And what about language? Well, what do you call your different strategies? That if I'm about to self-assess my risk tolerance, did you tell me that I could be aggressive or?
No. We don't use that kind of financial lingo at all. We try to speak in a very easy to understand way. We do not use the financial because, I mean, those specific words and the things that we in the financial industry love to talk about, information ratio and Sharpe ratios and everything like that, that makes you feel, that makes the client feel that they do not understand it. So we put a lot of effort at Opti, the robo-advisor, to really make things understandable. We try to take away every single kind of difficult word as good as it could.
And it's probably robo-advice does, I think, do a lot to address the gender bias in financial advice. But of course, the robot is as biased as the stuff that's been put into the robot in the first place. Yeah. So you can't advise the whole market. For example, absolutely impossible to advise all the funds that are out there, and etc. So the other biases in it, but I think it does deal with the gender bias, and I think it also increases the accessibility because it's got lower fees. So as long as people are aware of the existence, but of course excluded customer groups, the problem with them is that they don't even know that they need to invest in the first place. I mean, talking about a completely different spectrum of investors there.
I also reflected a bit on before I went up to this meeting on that you are very theoretical about investment has to do with the risk and expected return. And if I look at clients that are representing someone else, a foundation, for example, then you are very focused. It's very objective in a way. That's what sort of risk level are you prepared to take, and what expected return, and when do you need your liquidity. But if you invest your personal wealth, then there are other factors as well, more soft factors. Yep. And I imagine that those factors must be into those models as well to really get a grip on the full perspective.
It is very important how you pose the questions, how you formulate everything, and also how you illustrate risk.
Yeah.
Because that's a word no one really understands. And it's not the same for me as it is for you.
We have a question from the audience, PJ.
Yes, I'm curious to see, is there any difference in performance according to sort of the, because I think the scoring you made, was that also sort of looking back on the performance of the actual advice, if it turned out the way that it was supposed to be, or is it sort of independent of performance?
Yeah. So I don't know yet for this particular data, but I have just entered into a data sharing agreement with one of the largest banks in the UK, so I will soon be able to answer that. And the other thing I can say is one of my students last year wrote a great dissertation on gender, and they found that the female advisor in the firm that they looked at, the performance of the portfolios they ran for the clients was better than the performance that, on average, than the men were running. But for my data, I'm still to be found out. But it's very interesting.
I might as well invite you for more questions. Please say your name first.
Yes, question for Ylva. What's your thoughts on how this applies on different industries? I mean, does it hold through for others, advisory businesses like strategy, consultant, executive search, for example, very male-dominated among the partners? will the buyer of those services prefer a female partner, you think, or what's your thinking on that?
So I think that the research that I've sort of done, completed to date, is relevant to gender in the workplace, gender in financial advice, gender in accounting, gender in any kind of relationship, really, in any industry. I haven't done the research, but I think it bears relevance to lots of other areas, because we do feel differently depending on who's in front of us. And that's just a fact. We are all different. And that is not just to do with gender. It's also to do with culture, ethnic belonging, religion, look, lots of other different things. But I think it's got relevance to other. And actually, I want to branch out to look at other areas too. Very interesting.
Yes.
Yeah. Hi, and another question for Ylva. Thank you for presenting your very interesting results. But I was a bit intrigued by how you put kind of years of presence of women in the financial industry compared to, let's say, parenting as a factor for confidence and risk tolerance. So I guess my question is, would that mean that in 50 years from now, all else equal, which is a hard question to ask, I guess, but for the sake of the argument, all else equal, they will be feeling more confident around the same thing? I guess my counter question is to say, how much is it that the women feel as a group less confident around the advice they're giving because there is that macho culture, and how the knowledge is kind of communicated and how you're supposed to behave if you are knowledgeable? Do you see my question?
Yeah.
Because I'm wondering if there are like several factors playing in as opposed to just being in an area long enough to feel comfortable as a group.
Yeah, so I think there are lots of, excuse me, lots of different things to pick up on there. In one way, we are moving in the right direction. And I think naturally women will, just because of the pass of time, become more confident about their abilities in finance. That's true. But I think that what you pick it up on as well is the culture and the language. Unless that changes, it will continue to be a barrier. And sometimes when I do this talk, I get sort of the objection from people, well, we're already doing it all. We're doing it. We've got all the policies. We're doing it. We're doing all the gender stuff. But actually, it's not moving fast enough. And then I point out, well, look, there used to be 100% quota against women. And now you're talking about, well, we have to make sure that we interview more women. You're not doing enough. We have to, maybe we do need a quota. I don't know. I'm not going to. You seem to be applying that partly in your interview process, which is very interesting. So the other thing I wanted to say about that, I forgot. Did I answer your question? Okay, thank you.
I'll pass it on to the rest of the panel, and I'll slightly rephrase it, saying, if female advisors, if women feel less competent than men, even if they are at least as competent, how can you, as leaders, change that within your organization?
Yeah, that's what I wanted to add, because I think this risk appetite, or taking calculated risk, is really an area where I think we as leaders we need to focus on helping females to take more risk, both in terms of course, investing or being advisors, but also when you think about being entrepreneurs. And it's encouraging to hear about the startup community and that more and more women are going into becoming founders, but also in the typical career planning that you need to encourage and give support in a much greater extent to women, and to convince them to actually take on these roles that will make an impact longer term. So I definitely think it's an area. Your research shows that it's a much broader question than only, if I may say, investment.
How take away this deceiving self-perception of your competence that obviously some female customers, clients, but also perhaps advisors?
It's a lot of education and building. I mean, the comfort, the feeling, the confidence. But I wouldn't say that the female advisors that I have been working with and heading, I mean, I wouldn't say that they had less of confidence in their, advice or in the asset management investments. So maybe it's. Maybe
we are ahead in Sweden compared to the UK.
No, but so that's what they say, and this is what I get as well when I go and train banks. But when they complete my research, they do.
Yeah.
They do. They say, well, they think that because they are in this, they've made it in a male-dominated world. They think they're not, but actually, when it comes down to it, when they're self-rating themselves, they do. And that's quite. But I think one of the things you can do about it is publishing more widely actual knowledge results. Because the thing is, self-perception is not the same as reality in terms of what you actually know. So if you publish to staff members how well you're actually doing, then you start slowly learning that you aren't what you think you are. You're better than that.
What should you publish?
No, I mean as in, for example, results from client trades, winning transactions, performance of portfolios.
Should brag more.
Which is what came out in the...
Probably.
Tell people about the good things you do. I do. Was it you who said about... I do that to my boss. I send him an email once a month. Just a little update for you, George, what I've been up to. I do that every month.
And by the way, it was a success. Well, what a cup of tea.
Exactly.
Okay. And closing up here, you are the last panelists, so we should kind of wrap it up a bit. But I would like to quote the Nobel laureates that I've interviewed. They try to solve another big problem, world poverty. And their way of attacking that is saying, let's not solve the problem.
Yeah.
There's no silver bullet against poverty. There are thousands silver pellets or millions.
Yeah.
So they kind of zoom in on one thing that they want to change. And then step by step, maybe you can solve the problem. If this is a problem, which it obviously is, because we're sitting here, it's almost 2020, we're talking about underrepresentation within a financial industry, worse career opportunities for women, etc. We've been talking about 50 years about this, perhaps maybe 40, 30. Where would you like to start? Where's the low-hanging fruit that still is unpicked? Yes.
I don't have the low-hanging fruit, but I actually saw your interview and I was so fascinated by it with the conclusion that to fight poverty, it's not one solution. You need to look at many, many aspects. And I think to have research on different aspects, as we have seen today, is really important. So I think more research in this field for different aspects, because it starts when you're a young child, how you are brought up, how you are encouraged in school to choose different subjects, how you are encouraged to search for business school in your workplace, if you are encouraged to promotions, and it's everywhere. So I think, today research and it gets more objective also, because when you start to discuss this, especially with a man, I'm looking at you now, then it's very subjective. But it's important to have research for bits and pieces and really see where do we have the highest impact. And I don't know where it is, but I think it's in many areas.
I think it's absolutely in financial education. And also doing this in school, starting early, because then, both the girls and the boys in school actually get the same kind of information. So you're not, it's not all about what your parents tell you to cook or to invest. So you do it equal if you start at a low age. And then also we know that we have to address the female population with this. Mm-hmm. We have to increase knowledge and self-confidence. And so financial education at a lot of levels, making it not so difficult, making it easy to understand. And we know how to do it. But
beyond the mumbo jumbo, it's not that difficult. Anna?
No, to complement the awareness, I think also a little bit dig where you stand, because it's easy, to complain and to become. But we actually, if I look around here, there are a lot of many women in here with a lot of influence and a lot of possibility to make a change. So if we start by trying to make a change in the areas we work, then we can be. Just by showing it's possible and that it works, etc., then that will over time, of course, that won't help the full problem here now, but we all have a responsibility. And I agree with Anna Stenberg, it's a little bit tiresome always being the woman in the room and people look at you when you start to talk about diversity. But however, I think we can make, as women, we can probably make more change than we think.
Mm-hmm. I think that's wonderful concluding comments. Let's give the panel applause.